your trades on ET Now. This is Priyanka along with me, Sneh Shah. Sneh, we did clearly saw lackluster trade and it was more on a profit booking account. Of course, the Nifty did range in a range of around about 100 odd points. It closed below 22,900. Clearly a lackluster trade on the Dalal Street. Bank Nifty, though it opened with a gap up, but then it started to decline at the end. It ended around about 140 odd points on the lower side. VIX was up 4% today. It was more than 24% and 24 mark. And in fact, FIs turned positive they were on the long side in yesterday's trade, what we gathered from the F&O data. But then they did some buying in the index futures also, which we'll explore with Kunal also. That what is the index indicating right now? What are the levels that are indicating now? But then broader markets saw the deeper cuts. They were lower by the advanced decline ratio were clearly on the declining side. Broader markets, small cap was lower by 1%, mid cap was lower by around about 0.5%. But the clear outliers again was the pharma stocks, FMCG stocks, pharma names like Divi's Lab, Dr. Reddy. They were gainers for the second consecutive day. A lot of life insurance counters came into play today. They were moving higher today. FMCG names like and from the large cap space as well as from the broader market space, Britannia, HUL, Dabur, they happen to be the top F&O gainers also, and of course from the FMCG pack. IT also did lend support to some extent. HCL Tech, Wipro, they stood tall today. Auto stocks, namely like Eicher Motor, Hero Motorcorp, they were trading in positive name. But the clear losers today were PSE names. The PSU names and majorly from metal space, real estate space, energy stocks, and of course PSU banks and to some extent infra stocks. They were in the on the declining side today. So not a good day in terms of for bulls, maybe a lackluster trade, and of course not a good trade for the option traders also.
Well, absolutely. And you know what's interesting to note is yesterday we've touched 23,100 and today we've come back from that definitely. Yesterday also we shot slightly lower than that, but today, well, we've struggled to reach 22,900 also. So well, that's a little disparity in levels that we're seeing. But well, yes, Priyanka mentioned PSU sector of stocks. The biggest losers today in front of me is the PSU banks, and all of them have closed today in the red. You have IOB down 4.5%, IDBI is down 4%, Bank of Baroda, Bank of India, Union Bank, PNB Canada, SBI, all of them have closed today in the red. But then let's keep it going with all the buzzers. Then Timken India was one of the biggest winners in today's trading session, up 6 points, was doing quite well today, up almost 4%. It had 6.6% equity trade in a bunch, and reports say Timken Singapore, the parent company, is likely the seller, but we just have to wait to see who the sellers and the buyers in this trade are. On the flip side, then you had one stock that did very poorly today, and that was Inox Wind. Also on the back of multiple block deals, but that stock was locked in lower circuit of 10% today. There you have it. Inox Wind did very poorly today after 5.5% equity was traded in 6 bunches. Roughly 71.7 million shares were traded across block deals, and this is the worst performer on NSE 500 index today as well. On the flip side, let's talk about some big buzzers. Garware Tech was up 6.4%. Quarter for profit was up 16.4%. Nazara was up 5.5%. And that was also on the back of block deals, and you also had some brokerage notes on the negative side, but Nazara still managed to end the day with a very good gain of 3.8%. United Spirits was also up 2.3% on the back of the management con call, where they've guided for low double-digit revenue growth going ahead, so positive news coming over there as well. On the flip side, you had LG Equipments, which was down 6% because quarter four PAT has come in lower by 55%. TARC was also down almost 3% in today's trading session because this time around they've logged in a loss of 52 crores versus a profit of 2 crores this time last year. So well, there you have it. Those are your big buzzers of the day, but let's keep it going with the markets. Let's discuss what the markets seem to be up to, at least when it comes to tomorrow's trading session. And to discuss all of that, we have Kunal Bothra, our in-house technical expert, joining us on the show. And Kunal, help us understand the kind of moves we've seen, right? Because VIX is once again spiking. We've reached an all-time high yesterday, but today we've struggled to cross 22,900. So give us a sense of what's next for the markets going ahead. Tomorrow, at least on the Nifty front, what can the viewers expect?
So see, I'll probably keep it very simple that at VIX of 24, if the index is in a range of 1%, that will still be considered as very healthy for the indices, because at such kind of a sharp rise in VIX as well as higher levels, elevated levels of VIX, we generally expect that the index range becomes much more broader. I think it's almost like a 3% to 5% range, which we typically look out for at such kind of higher VIX levels. Just to give an example, in 2022, Feb 2022, the VIX had shot up to 24 to 26, 28 plus mark in a matter of few trading sessions, and the Nifty at that time I think was 16,000, 17,200, 300, and from there we corrected and fell back to almost 16,000 mark for the index in just a matter of few trading sessions. So that's the impact of such sharp rise in the VIX. That's why I would believe that if the VIX continues to be at 24 levels and if we see a gradual upside but no major impact on the indices, it will still be considered as net positive for the index. The good part about the market so far is that large caps are acting as more stronger this time around as compared to the weaker nature of the large cap names which we've seen in the last so many months, as well as over the last 6-8 months specifically. And the mid caps and small caps are the ones where you're seeing definite amount of weakness. So I believe it's profit booking on one hand, as well as maybe some cushion coming back and generating back towards from the large cap names. That's how the markets are balanced.
Okay, the market looks balanced to you, Kunal. In that case, with what happens to be the immediate support here? 22,800 is considered the one. Is it what you are also eyeing at, or there chances of rebound tomorrow? And what are the trades that you would eye on?
So 22,600 to 700, I think, is a stronger support for the index. So because it's the expiry week, there's a lot of pressure for the markets. Generally, it happens that because of the rollovers, the markets tend to be a lot more volatile. So we keep a band of more than 1% to 1.5% for the index on such kind of round strikes, like for example in this case 23,000 marks. So that's why I would believe 22,700 to 22,600 could be a much more stronger and a broad-based support for the index. Now in that context, I would still go with buy calls, and my expectation is that two of the stocks are going to a breakout mode. So CIE India is something which has started to look very attractive. Have been bullish on the stock in the last 1 week or so, and the stock has moved from 495, 500 to now 545, 50 mark. Even at current levels, it looks attractive for a potential target of 600. Stop loss could be kept at 500 for the fresh trade. And Asian Paints is something which has started to look very attractive. The stock could probably go through a potential short covering move, and we've seen the stock underperforming for the last 4 to 5 expiries. So which means that we could be at a cusp of a potential turnaround for Asian Paints also. Would suggest a buy with a target of 3,000. Stop loss could be kept at 28.75.
Quite surprising, those Snehi Asian Paints, because what we have seen is that oil has been trading low from last continuous 8 weeks, but then it did not spur. It not spurred Asian Paints.
Because of pressure of so much of short positions, and I think once it starts to unwind, it's going to be acting as a relief rally.
Sure.
All right, Kunal, well, thanks for sharing with us your picks. So CI Automotive and Asian Paints is where Kunal is bullish on. Kunal, thanks so much for joining us. We'll let you go on that note. But viewers, let's keep it going then. And it's time to listen in to the word from the wise. And today that happens to be N. Jayakumar, MD at Prime Securities. Let's go across and listen into his outlook on the market and if he's expecting any correction in the near term, given the rally seen in the market in the past few sessions and amid all of this election frenzy. Listen in.
First thing it tells me is that a lot of shorts have covered. The general feeling amongst FIIs over the last, I would say 12, 18 months has been that India is moving ahead of fundamentals. Markets have continued to rise despite them being net sellers. They have, to my mind, both as traders and as investors, been light on the market. And as traders, whenever their short positions sort of from a market structure point of view becomes excessive, you have the kind of rallies that you have. Just about 10 days ago, they were net 2.5 lakh contracts short on the Nifty. Today, you're talking about that having been cut quite dramatically, and therefore a rise of the 1,000 points that has happened from 22 to 23K. My own assessment is that, especially even as investors, the local investors have now got a higher percentage of company holdings than foreigners. So that's, to my mind, the big takeaway of the last 5 years has been the, should I say, the preeminence of the Indian retail investor, unspoken, unsung, unknown investor through SIPs and through his investments, and largely through mutual funds, has remained, an increasingly important constituent of the markets. In fact, on a day-to-day basis, I have actually started seeing the DII flows far more than I've seen the FII flows.
All right, we have more in store, but then here we stay for a short break. Don't go anywhere. More to come on the other side. We will get you all the derivatives action and, of course, the big stories of the day.
Hi there, welcome back. You're still watching Your Trades on ET. Now let's take a look at how the day shaped up when it comes to the derivative segment, and let's take a look at what's happening on the index futures front. For Nifty as well as for Nifty Bank, we did see some short build-up taking place, indicating a slight bit of a bearish sentiment being built up in the market. So, well, short build up for Nifty and Nifty Bank as well. India VIX, like we mentioned earlier, above that 24 level. So, we did see quite the spike in India VIX today as well. And in terms of active calls and active puts for the 30th May expiry, let's start with active calls. We did see some call writing taking place around the 23,000, 23,100 levels. And, well, that makes 23,000 your next resistance level to watch out for. And in terms of active puts for the 30th May expiry, we did see some put writing taking place around 22,900 and 22,800, making 22,800 the immediate support level to watch out for. So while 23,000 on the upside and 22,800 on the support are the levels that you need to be keeping a close eye out on when it comes to the Nifty.
All right, that's on the derivative side, but what's making the big story today is definitely the elections. With just 3 days to go for the final phase of Lok Sabha polls, the buzz around whether the Modi-led BJP and NDA can retain their majority, this is what is gaining ground. IIFL, GM Financial and Bernstein have come out with the expectations from the polls. Somit joins us to take us through the key expectations. Somit.
Well, if you see all the 4 brokerages that have so far come out with their expectations are expecting BJP-led NDA to retain power in 2024 elections as well. Now, for JM Financial, if you see the base case is that BJP will win around 299 seats. The bear case is around 290 seats, and for bull case, they're expecting around 310 seats win by BJP. For Phillip Capital, it's around 290 to 300 for BJP and 330 to 340 for NDA. And in the bear case, they're not expecting majority expecting a majority to come in from BJP, but they're expecting a majority to come in for the NDA, that is the coalition. For bull case, they're expecting 325 plus for BJP and 360 plus for the NDA government. Now, IIFL does not have a bear and a bull case, but their base case is expecting BJP to have around 320 seats, and Bernstein is expecting BJP to win around 330 to 350 seats in the ongoing election. Now, apart from that, voter turnout was one of the concerns for a lot of analysts on the street, but what Phillip Capital is saying is that voter turnout won't really be a concern, given the fact that 2024 numbers are a bit lower compared to 2019, but 2019 saw the highest ever participation due to nationalist wave after the Pulwama attack. Now, also IIFL is saying that there has been no 3 consecutive years where India has seen a rise in their voter turnout, and voter turnout decline itself will not change the outcome of this election. And they're also saying that the rise of women voters in fact is benefiting BJP government currently. Apart from that, if you see, IIFL is expecting Uttar Pradesh, Odisha, Bengal, Telangana and Andhra Pradesh some modest gains to come in for BJP, and JM Financial is expecting Maharashtra, West Bengal and Tamil Nadu to be the swing states in this current election. When it comes to market perspective, Bernstein is saying that post the elections, the key things to focus would be the 100-day agenda coming in from the BJP government and the budget expectations. Apart from that, they're also expecting a short-term breach of the 23,000 level that we had seen recently. Apart from that, they're also saying that the focus post-election would shift to macro, earnings and valuation. When it comes to JM Financial, they're expecting, they're seeing opportunities in the defense and the capital goods space. They're also saying that the valuation comfort is there when it comes to banking and consumer space, but this time they're expecting the rally in markets to be led by large caps and not small and mid cap. And lastly, when it comes to Phillip Capital, they're saying that even if there's a bear case scenario, one should buy into equities when there's a steep correction, because given the fact that the leadership will continue to remain, because they're expecting the majority seats to come in for NDA, they're expecting a buy and dip as a strategy going forward, and they're expecting markets to recover over the longer period of time.
Alright, Somit, well, thanks so much for taking us through that and breaking down the bear, bull as well as the base case of these major brokerages and what they have to say when it comes to the election frenzy. But let's keep it going with the earnings then, and market honchos are largely focused on policy continuity leading to a potential rally post the 4th of June. Let's understand the rationale from the likes of Mark Mobius, Dinshaw Irani as well as Vikas Khemani and what they have to say on how you should navigate the markets amid all of this election volatility that we're seeing. Listen in.
Modi, of course, will still be pretty much in control, and he'll be able to continue this incredible growth program that he has for the country. Definitely be Modi again. The question is whether he can have control of Congress and have the ability to change the Constitution. That's the big question mark. And of course, if that does not happen, then there might be some disappointment. But I think, it's already being fed into the price.
We just need the government to continue. It didn't matter whether they came in with a 300 plus or a 400 plus kind of majority. All we needed was them to continue, and the continuity is what we were looking forward to. And I think more or less that is a given. I mean, we can keep arguing about the two-third majority and all that, but still, I think that is a given.
And I do believe that we are in one of the best wealth creation cycle, and hence that should continue. Any continuity will only further that confidence.
All right, now let's shift focus to individual trades. Talking about Borosil, good numbers, sharp margin expansion, and of course, the competition is the rising competition is hurting the margins. We spoke to Shrivar Keruka, Managing Director of Borosil. Let's listen to it, what he has to say about the targets and the outlook ahead.
While the margins optically look high, we look at the business from a return on capital employed perspective, and that's our challenge, is to increase our return on capital employed to north of 20%. Scale up with new products which are coming in. So we can go 3 times in terms of our glassware sales with the current capacity that we have. Overall, we have just finished most of our capex. This year it's about 100 crores that we will do, which is for some debottlenecking in our operations, as well as trying to reduce our costs of energy by solar power plants. Which will allow us to reduce the cost of electricity that we buy. But overall, 100 crores is for this year. And of course, as we increase capacity utilization, then, in the coming years, there will be more capex, which we will do.
Well, that's the word coming in from the management of Borosil, but we did highlight some buzzing stocks in the show earlier. But Gaurav is standing by with a list of more stocks that had the attention of all the eyeballs today in the trading session and were big buzzers today, either on the back of Q4 earnings or their respective news flows. Gaurav, thanks so much for joining us. Take it away.
Well, yes, let's begin with 3M India, because if you look at the numbers, revenue increased almost by 4.6% on a YY basis. Net profit actually increased almost by 27%. And even if we talk about EBITDA margin, that has increased almost by 100 basis points. Apart from that, the company has actually announced a special dividend of 525 rupees for shareholders. And at the same time, they have also declared a final dividend of 160 rupees. And on the back of this news, we saw the stock went up almost by 9% in a day today. Next, let's talk about TTK Prestige, because if you look at numbers, revenue increased by 1.9%, while net profit actually declined by 1.2%. Even if you look at EBITDA margin, that has also declined almost by 74 basis points. But if you look at stock price, it actually actually reflected some uptick after the results. Next, let's talk about Rides India, because if we talk about the numbers, revenue actually declined almost by 6%. If we talk about net profit, that is down 1.6% on a YY basis. EBITDA margins also declined almost by 53 basis points, and we saw the stock turned in red today. Next, let's talk about Dreamfolk Services, because if you look at the result, revenue increased almost by 18.5%. EBITDA margins actually saw a decline of 535 basis points on a YY basis, and again we saw this stock also turning in red today. And lastly, let's talk about Shalby Limited, because if you look at the numbers, actually revenue increased almost by 22%, while if we talk about EBITDA margin, that also showed some kind of improvement of 300 basis points. If we look at net profit, that has increased almost by 15% on a YY basis, but it seems that the positive number were not actually in line with what the street was expecting, because if you look at stock price, that has gone down almost more than 4% in a day today. So definitely watching out on all these stocks as what happens and how the investors actually look at these numbers in a days coming ahead.
All right, thanks very much, Gaurav, for all that compilation. But then one nifty stock which is yet to report numbers at all, eyes on Tata Steel, which is expected to report its Q4 numbers, and both the top line and the bottom line are expected to rise sequentially. Anisha is here with all the expectations. Let's understand from Anisha. Take it away.
In fact, talking about Tata Steel particularly, we expect the overall earnings to show a decent amount of growth. For Tata Steel, we are working with a growth of around 4% on a sequential basis in terms of revenue, so that the number comes closer to around 57,000 odd crores. Remember, the India operations have been doing okay, but the realizations this time around had taken a dip. That's what we have seen from the likes of JSW Steel, etc. as well, and that's why we are expecting that the revenue growth is going to be a bit softer. And to add to that, the Coal, which was consumed in the quarter gone by, came in at a higher cost. So that is why there might be a bit of pressure as far as the profitability is concerned as well. Having said that, the Europe EBITDA per ton should improve, and that's why we're expecting the losses there will narrow on a sequential basis. In fact, the overall deliveries were up around 8%, and that's something we know from the European business. But the higher sales volume, improved realizations, and the lower operating costs will aid the spread sequentially there, and the EBITDA per ton estimates are expected to be, the losses that is expected to be around $105 to $115 per ton. In terms of what to watch out for, well, that entire transition in the UK is something which remains a key monitorable. The capex guidance for the coming 2 to 3 years, what happens to the debt as well, and the overall performance of the India business, whether EBITDA per ton declines around 15% or more to around 15,000 rupees per ton level. Those are the key monitorables to watch out for from Tata Steel.
All right, Anisha, thanks so much for taking us through that. Lots to watch out for when it comes to Tata Steel's numbers. Nifty company coming out with its numbers, so we'll keep a close eye on that, definitely, Priyanka. But, well, yes, that's all on this edition of Your Trades. From Priyanka, me and the team that put this show together, thanks so much for watching.